Welcome to our latest episode where we're thrilled to introduce Denis, the man steering the ship at TVH Wealth. Today, he's here to talk about an exciting new chapter for TVH Wealth and TVH Group, a partnership designed to create more value for their clients. Denis dives into his rich history within the financial services realm and his evolution into an independent portfolio manager. He'll shed light on what makes TVH Wealth stand out, from their dedicated team of specialists to their meticulous focus on managing risk. It's all about crafting a safer, more prosperous future for their clients. We get into the nitty-gritty of what financial planning really entails at TVH Wealth, highlighting the crucial role of an investment policy statement. Denis also offers insights into evaluating investment portfolios, navigating market conditions, and what's on the horizon for TVH Wealth. Plus, don't miss his tips on asset management and where to find more information.
Once again, I'd like to welcome everyone to the Money Mindset Mastery podcast. I'm your host, Jim, and joining me as always is my co-host, Ryan. Ryan, how are things today?
Well, it's great. We got another compadre joining us today that will hopefully add some insight to the money mindset mastery for everybody out there. So.
Yeah, and I'm excited because our compadre I found out is a cigar smoker. So maybe the next episode we'll be sitting outside smoking a few cigars while we're recording. I'm really excited today because a couple of, I guess there's an announcement and an introduction to a lot of our clients. So in terms of the announcement, TVH Group, along with TVH Financial, has entered into a referral arrangement with newly formed TVH Wealth. And the head of TVH Wealth is our guest today, independent portfolio manager, Denis Bisson. Welcome, Denis, to our show.
Thank you. My first podcast, so I'm looking forward to it.
See, I was going to ask if this was your first one. So, and normally, you know what? Yeah, we're easy going. Just relax, sit back. You know, if you have a drink off the side, we're good to go. But we're really excited that you're here, and that you're also an independent portfolio manager with Raintree Wealth Management as well. So we need to let people know that. So today we're going to have to just interview Denis, and I know, Denis, you don't like talking about yourself, but unfortunately, people want to know who you are, or fortunately, they want to know who you are. And we'll talk about TVH Wealth and what that all entails, and the new relationship that we have established with the TVH Group and TVH Financial. So, Denis, we're going to start off with this is your life. I don't think we're going to go back to the day you were born, but I think we should start to when you started in the financial services industry, how that all started, what attracted you to financial services, and how that led you to Raintree Wealth Management eventually.
Yeah, well, going back, I'm not 20 anymore, so I'm going back quite a few years. Yeah. It started in 1989 when I started at Canada Life in the group pension department. This was my first in Toronto, so it was my first foray into the industry. I started learning about seg funds, performance, a little on that. And I also started my education experience and my education basically pathway up until today, which never really stopped, by doing the Canadian Securities course. A long time ago, but it started there. After a while, there was some changes happening at Canada Life, so I was looking for a further opportunity to get a little more direct experience, and I ended up at a small private wealth firm that was owned by a brokerage, where I was actually in charge of marketing and client service of the mutual funds, where I actually spoke to the portfolio managers on a regular basis and passed their word around. They weren't going to speak to all the advisors selling, so they were getting me to do it. So again, I learned a lot of experience on that. And what happened then, and it was the first of many, is that there was a reorganization. The brokerage was bought out by a bank, a couple mergers, new bosses, new direction. My position changed. The funds I was initially working with were merged with another funds. I moved a little more to the institutional side and started expanding my role as well. So we moved to a little more on the institutional side, client servicing, and we also moved to a little on the operations by setting up trade management systems, compliance, you name it. I was the guy. If you weren't a portfolio manager, you were assigned all the admin and operations tasks. So that started there. And also, again, if I look again at my education path, it was also starting to expand as well. I started the CIM. This was the first CIM, which was the Certified Investment Manager. And then completed that just to learn more and to try to expand my career. So that started then. I ended up in the end at this position after numerous bosses and mergers, still working with portfolio managers though. I ended up the head of the VP of operations there. So that was exciting, but very intense, very weekends, you name it. Constant work, and Bank Montreal was still going through changes, so a change was ready for me, and one of the reorgs. So I ended up in the advice channel, working for a financial planning firm. So that was interesting to start because they were also going through changes. Throughout my career, I've noticed that every bank, every financial planning firm, they're constantly changing, trying to adapt, getting any client to getting only high net worth, any movement around that, from concentrating on financial planning, from investments, and then just downplaying some of the what they used to think was the most important part. So the whole industry was changing, as you know. Deferred sales charge got axed. The firm I was at kept on changing to a point that I really didn't know where it was going, and which meant I really didn't know where I was going. So when I got the offer to be a portfolio manager, being back to the investment side at Raintree Wealth Management, I jumped at the occasion. Also helping me make that decision was I was able to bring my clients along. So I was able to continue to do the financial planning for my clients. Being licensed on insurance, I was still able to do insurance, so I carried that over as well. And then, it's been a little over a year now, and I will soon be a full portfolio manager at Raintree as registrations are completed. So happy to be here. And of course, after that, and changing teams at Raintree, TVH became an opportunity, and I jumped at it as well because of everything that TVH offers that my former team did not offer. So glad to be here.
And we're glad to have you here as well. So before we lead into TVH Wealth, I see you have multiple designations. So your MBA, you talked about your CFP as well. So you are a certified financial planner. So you bring that offering to the clients. CIM, which helps you or allows you to become a portfolio manager or manage portfolios. And then the last one, TEP or TEP. Can you maybe talk a little bit about that?
That's the trust and estate practitioner. When I was at my the prior firm, you learn about trust a little bit in doing the CFP, but you don't get it into detail. So somebody close to me ended up inheriting a trust. So I wanted to learn more about trust to better answer her questions and to better answer any client's questions. And I certainly learned a lot that, I think the image of setting up a trust for somebody is only for rich people. Well, that is not always the case. It is. There's a reason for setting up a trust, and it does work perfectly for depending on what your goals are. So I ended up with the TEP. I ended up taking that on my prior firm. I finished that, and the other part I found out that's very important in financial planning that the TEP helped as well is estate planning. Everybody seems to ask about how to avoid taxes, reasons to avoid taxes when you're, doing your will and planning your estate, what you're going to leave to your family. And it's all around how to do it. Yes, you can save taxes by doing it in one way, but you can also get yourself in trouble if you're starting to put names of everybody else on your assets. So it's really, you really got to have a plan, and you really got to do it right. Don't avoid a little tax and get nailed after on bigger taxes and bigger problems. So that's why I did that, and then I still every day now. Every time I speak to my clients, they ask questions about on taxes, estate, principal residence, anything like that, or I want to leave money, but it's too much. How can I do it? Give it piecemeal as opposed to a lot, because they spend, they're big spenders. How do you do it? How do you do it if you're a couple, you have a young daughter, and both couples pass away? How do you leave money to your own kids? I've had to do that with my own because they're still a minor, under 18. So how do you leave money to them without, without leaving it to somebody else and hope they leave it to them?
Yeah.
So you set up a trust and you set up guidelines on it. Like I said, it's not just for rich people. It's for a lot of people that are in different circumstances that want to leave money um, to either kids or somebody else that it may be difficult if they're not around to direct it. On a trust, you could direct how the money is going to be spent and how it's going to be given, and a time frame as well. So very important on that, and that's what I learned. And then I'll be talking again to the one that made me initially sign up for the course.
Yep.
She's coming up on potentially getting all her assets. It was left to her, but only given to her once she reaches a specific age. There's also maturity. You never want to leave an 18-year-old 200,000 or 300,000 or higher. Obviously, the numbers can be very much higher.
Yeah.
Do it piecemeal.
Well,
And having that expertise, is very beneficial to a lot of our clients as well. And I suspect having a team to back you up now, having a lawyer as part of the partnership to help you with establishing some of those trusts or creating those trusts, having an accountant who would be able to potentially do the returns and deal with any tax issues as it relates to the trust. I mean, that must be huge for you to be able to have access now to these specialists within TVH Group to assist you and your clients as they go down that path.
Well, that's the reason I really want to join TVH, is you do have access to that. Now, I could give a lot of recommendations, but to have the lawyer there to solidify those and to put it on paper without sending the client somewhere else, go to your lawyer and here's a list of what you should talk about. No, the lawyer's right there. On some of the meetings I can be there. I don't need to be there, obviously, for all the meetings. And this is what drove me to wanting to join TVH. The same with the of course, you mentioned the account for small businesses, and we never had access to that before. When I was at IG, sure, we could ask them something, but they would never work directly for your client. There's a lawyers there to ask to answer questions, but they would never do the will for your client. Here, they can do it, and the same even with the mortgage. If somebody wants a line of, a secured line of credit, colleague John could help with that. Bonus. It's all around. It's a small family office. It's growing, and this is exactly what I was looking for to take that next step. I still retain my portfolio manager, and still part of which I know we'll get into a little bit more. Still part of the investments, but I'm also working with a full team.
Yeah. I think that looking over, the course of the last couple of years, especially with you, Jim, of this idea of wanting to bring more and more people together that can really help a client, a business, really not be running around and finding different professionals all over. And what often happens with a lot of clients is they get caught up in waiting for answers from different departments and their chain of command. And I think, a great addition of Denis, bringing in the wealth side and being able to pair all the different parts of the TVH group and everybody that's involved within that really speaks to kind of our mission of wanting to really provide as much service and knowledge to our clients in one place, and with people that are amazing and professional to work with along the way. Speaking to some of the things that I've learned about you, Denis, too, is I jokingly say sometimes the alphabet soup that comes behind our names, but it also shows kind of the drive to want to, especially in our industry, to want to continue to grow, to want to gain more knowledge, to be able to serve and help more people and support them along the way. There's endless amounts of knowledge for us, but again, when you have a core group like the group that we've put together now, again, the dream team that we're working on, really bringing all of us together to really solve pretty much any client's issue, solution, wealth protection, estate planning, all of these things that get lost when you're just dealing with one institution with only one singular like mission or goal versus a group of people that have a common goal, really to help people and serve them and do what's right for them. I guess for yourself too, going into this kind of evolution of the TVH group and what we're able to support. What else do you see as something that potentially stands out as a service that others need to know about when it comes to reaching out to one of us?
When we reach out to, I was going to mention this before. The one thing when you do a referral to, especially one of your colleagues, you fully trust them. You work with them. They're beside you the next day. So a lot of times when some clients ask me for a referral, I've met somebody, but do I know how they work completely? No. So now I do, and they're beside me. So they're going to be they're in good hands. And if the client even wants, you could be there with them on the meeting with the lawyer, the accountant. Probably wouldn't need me for every meeting, but an intro meeting. And if the client feels more comfortable, then sure. It's the trust factor. I think that's important. We know from my initial discussions with Jim, I know that he puts the client first. Having worked at a brokerage and at a financial planning firm prior to coming to Raintree, that is not always the case. When you put the client first, it's very important. You're not looking at what you're going to get paid on commissions or anything like that. That's not always the case everywhere. And that's why, again, when we had the started conversation, we hit it off, and which is why I wanted to join.
So I think at this point, really, I want to be clear on something as well, because the branding obviously is the same, TVH Wealth and TVH Group and Financial. But just as full disclosure, TVH Group or Financial or any of the companies within TVH Group have no ownership in TVH Wealth. TVH Wealth is solely owned by Denis. You are the sole independent portfolio manager. The benefit that we have here is that you are also an exclusive independent portfolio manager to the clients of TVH Group. That's where the benefit is. And if you're not a client of TVH Group, you can become a client of TVH Group and work with Denis on the wealth management side of things as well. So I just wanted to put that out there, make sure that that's clear, and there's no misunderstandings there as well.
The better question is, why aren't you a client of TVH Group yet? So,
yeah, that's a good question. Well, they got to keep hearing, these podcasts, and eventually, I think they will become clients of TVH Group at one point or another. And just as a quick reminder for people who might be listening for the first time, within TVH Group, we have my partner John, who handles TVH Mortgages, and he's a mortgage broker. We have my partner David through TVH Accounting, so we do offer in-house accounting services. We have my partner Sonia, who is head of TVH Legal, so we do offer in-house legal services. And with myself, I'm head of TVH Financial, where we offer our retirement planning services, insurance services. Ryan is my associate advisor, but Ryan and I also have a separate company called TVH Cash Flow Solutions, which is a cash flow coaching program that we offer to our clients as well. So again, adding Denis now with the wealth management piece is fantastic, because before Denis joined us, we were referring out to external partners, and they're all great external partners. No issues with working with any of them. But like Denis, like you said, the fact that we're now side by side working on files together, working with a client who's part of the team now and the ecosystem of a TVH group, there's just so much more efficiencies there. We're finding a lot of our clients, it's one of the things that they come back to us and say is the fact that they're working with a group, they provide authorization where we can share their information amongst the staff and the team at TVH Group, and we can handle their file regardless if it's a mortgage file or if it's an insurance file or an investment file, to be able to access that centralized information, that client information, to help them with their planning, offers up so much more efficiencies. They don't have to sit with 2, 3, 4 individual professionals and spend an hour at a time with those individuals. And the other part too is no one's quarterbacking that situation for them. The client is expected to quarterback everything, and unfortunately they don't have full understanding. The fact that we're quarterbacking things on their behalf alongside the client also helps them with that level of efficiency and making sure there's no overlap or gaps, right, in whatever planning that we do. So just wanted to put that out there. You did talk a little bit about the inspiration behind launching TVH Wealth in terms of partnering up with individual partners. You've worked in the industry for a long time. You've worked for different firms. In terms of TVH Wealth, how does that stand out compared to other wealth management services that are available out there in Canada specifically?
Well, one of the things in part of our portfolios is that it's almost like a pension where we have access and we are buying alternatives. As you know, just to take a step back, the first thing we look at anytime you're looking at performance, it's the asset allocation. So that's the first thing we need to look at before we set up a portfolio. After that, then you're looking at what is available. So the one thing about the independence of Raintree and the portfolio at TVH Wealth, it's they're all independent managers. They're not related to us. We don't have to keep them if they're not achieving their targets. Every manager we pick for the asset allocation, if they don't meet their targets, we don't have to keep them. We could replace them. Having worked with an asset management company for 23 years, I know it's difficult to replace internals because you really have to replace the person or persons involved. This you don't have to. And we've been making a few decisions, revamping up. Our assets are growing. We're access to new managers. We have alternatives now. The alternatives is sort of, you got the private equity, you got real estate, you got managers that look for absolute returns. This is key because individuals would have difficulty accessing that. Some of them are illiquid. You only could buy them once a month. Some of them are priced only once a month. Some of them are only for accredited investors, which you need over $1 million in assets or need to be making over 200,000. This case is very different. We are a fund buying it where you could have it's indirect access by buying our portfolios. So very important when somebody's looking at investing, because in this, I'll get a little more into probably in other questions on the management process, but I'll just touch on a little. When we look at the TVH or we look at the portfolios, what we're trying to do is manage risk, volatility, keep volatility low. If the market's down 15, do you want to be down 15? No. If it's up 15, well, you may not be up that 15, but it's a give and take a little bit. It's protecting downside risk. So when we look for managers, we want to see a lot of upside. So if the market's up 10%, they're near that, and less downside. Market's down 10%. If they're down 6, 7, well, that's a little better. With the alternative managers, their benchmark's not really the stock market or the bond market for that matter. They do their own thing, and it protects the portfolio when the markets are down. And if they're up, they also have a positive return because that's what they do. They look for returns when there isn't. Some of them make more money when the money's more returns, greater returns when the market's down because they trade on the volatility. So this is important. Now, we're not taking big positions in this. It's not we're not taking 20, 30% of the portfolios, and we spread it among managers. But the fact that the positions are there, I think, is important for somebody looking for that slow, stable growth without the volatility. Are we going to be 10% in NVIDIA, despite that fact it's always up? No. We will probably have the benchmark return, but or the part as it's part of the benchmark, but we're not going to take big bets in any sector. I use an NVIDIA example, but you got the entire technology section. We're not going to take big bets. At my prior firm, you had a couple different U.S. managers, for example. Some were 30, 40, even 50% tech, and that was their U.S. offering. So that's not something we would do. It's more we want some exposure, but we don't want the heavy exposure, and we're not going to make a big call. I've been through this market long enough to know all the bubbles that we've seen over the years, over the decades, that some things may look good now, but they may correct, and sometimes they correct very fast. The .com, for an example, on the internet craze, that was a quick correction, and some people really got hit hard. And that's why, and I know we'll get into it a little later, that's why selecting investments that's appropriate and a portfolio that's appropriate to somebody's risk is extremely important.
And this is where the alignment comes into play, right? Because TVH, for those who don't know, stands for Tortoise versus Hare. And we believe the slow and steady approach always wins the race, regardless. And that's where the alignment came with you, Denis, and Raintree as a portfolio manager, and then launching TVH Wealth, because that is exactly the approach that we model, is that Tortoise versus Hare, that slow and steady approach. I think the other thing that I'm excited about adding you to the team as well, and you and I, similar amount of time in the industry, is experience, right? To your point, you talked about the .com era. I remember that. I remember where my buddies were taking equity out of their homes and putting all that money into just Nortel, for example, against my recommendations. Like, I would sit there and say, you shouldn't be doing that at all. But that's what they were doing. They were chasing the flavor of the month or the year. And of course, many of them lost their shirts as a result of that. So it's one thing to read about what's happened in the past in the markets and to show charts and whatever else. It's totally different when you can say, or I can say, in this industry, we've lived through those events. We have seen this happen repeatedly. It will happen again. This is the reason why we structure things the way that we do. We don't really know when these events will happen. It's very difficult to predict. But as long as you've structured your portfolios in such a way to protect you when it does happen, the recovery is so much smoother than, someone losing 50%. If they have a 50% return, they're not back to break even. That's the misunderstanding with a lot of people, right? And that's the whole point about, if we're only down 4% in a year where everyone was down 12, 15, 20, it's very easy to recover from that 4% correction compared to someone who's down double digits, right? So that's where I'm really excited, because of the alignment, the approach. It just fits right in with the whole TVH model and philosophy. We're going to talk a little bit about TVH Wealth's approach outside of just investing. One thing that you do when you onboard a client is you put together an investment policy statement. So maybe you can explain what is an investment policy statement and why is it important for someone to have an investment policy statement? What's the process behind establishing an investment policy statement?
Well, the first thing, you're trying to get an idea of what they should be, how they should be invested. So when we're creating one of those, we're asking a lot of questions on risk. If the market's down 10%, how would you react? If it's down 20%, how would you react? We're also asking questions as well as, what is the goal of this money? Is it short-term money, or is it retirement money? You won't use it for 20 years and you may start taking some money out and, after that. So that's the one thing that's clear on that. And we cannot accept any assets, any transfers, open applications, or anything until that is done. We really need to understand, and it's a personal one. So everyone's different. So it's going to be personalized based on their answers to the questions and conversations. So once that is done, it's put in place. And once the funds come in, once you start the application process and everything else, the funds come in. And then we start investing, but we can't do any of that until that is done. It's just part of the package. You mostly used to see it on the institutional side, but you're now starting to see it a little more on the wealth management side. You just want to make sure that they feel comfortable with that portfolio, unless there's a life event for years to come. Everybody would love a 10% return. They're not going to complain. But you're going to hear the complaints on negative 10%. So you want to make sure it's not aggressive enough where you could see the big swings. And we don't tend to have aggressive portfolios to begin with, but you really want to make sure that they will be comfortable no matter what the market conditions are. We don't want the phone call saying, what's going on? How come it's down? They're going to know how they're invested. They're going to expect some ups and downs, and they're going to feel comfortable. Because it's not going to be the big swings where they would not feel comfortable. People that are a little more aggressive, they may not even look at their portfolio. Sure, we'll go for the growth side, only the growth side. Again, our portfolios are not built for full big bets, but at the same time, we do want some growth in our portfolio. So they're definitely built for growth as well. So that's the first thing. After that, you do the investment management agreement, and then you bring on the client. With the process on the account opening and everything else.
And this is where I've personally noticed the gap in working with external referral partners on the PM side. Again, wonderful firms that we worked with, wonderful people. I have no complaints whatsoever. But one of the challenges that I found was when we talk about the investment policy statement as an example, they would be set up by the PM, which was wonderful. But then moving forward, whenever there was, if I was sitting down with a client to do a full retirement review, it was very difficult at times to coordinate a meeting with the external portfolio manager. And sometimes when we were able to have those reviews, it was more about here's how the portfolio has performed. And they never really incorporated the investment policy statement in those reviews. They might have had that conversation separately afterwards. And then the other part too is, when we're putting together a retirement plan for a client, we know all of the assets that they have within TVH, but the external portfolio manager wouldn't necessarily have that information or even ask for the information. They're, again, strictly focusing on the funds that they're holding and managing for the client. Having TVH Wealth now, having you in-house as part of the team, it'll be very easy now moving forward for clients who have funds invested with TVH Wealth, where if I'm doing a review meeting or Ryan's doing a review meeting, to include you in those review meetings, and you behind the scenes, just so clients also understand, we are all working on the same retirement financial planning program as well. So we're all going to have shared access to the data. So Denis, when you're sitting down with one of our clients now, you're not only looking at the funds that they have with TVH Wealth, but you'll also be able to see, they also have segregated funds with this other firm over here. They have, whole life insurance with cash surrender value that's built up. There might be annuities that are out there. You'll be able to really look at the big picture. And because of that, you may also be able to adjust the portfolios with the client, because you might be able to take on maybe a little bit more risk on the TVH Wealth side, knowing that they have these other potentially conservative assets sitting with an insurance company or wherever else they're invested, right? Yeah. So I personally believe that that's going to be huge in working with our clients moving forward.
Yeah, because you always want a full picture of what the client has. And first of all, you want to know what their risk level is as well. If they have they have other assets somewhere else, there's always fallback. This is when, depending on what you're looking at for the investment side. You want to know what else is there, how they're invested. I've had portfolios where somebody had an outside account. The all the questions we went through conservative, but I look at their statement outside. It was like 100% aggressive, and I mean really aggressive. And I was trying to balance this out, and it turns out the client really didn't know how it was invested outside because nobody really asked them.
Yeah. Yeah, that's one of the things that often comes up with me with meeting with clients who haven't done these regular reviews with their portfolio manager or institutions that they're dealing with, is that they come and we review and they've lost a significant amount of money, not realizing that they've never gone through a proper risk assessment for themselves, right? The right questions are asked, and that as we get to know our clients, you kind of get an understanding of what kind of risk, because when somebody says 10%, well, it depends on how much, right? So, 10% on $100,000, is that going to make you not sleep at night? Or is it maybe 30%? Or is it 5%? And what that difference makes for clients across the board has been very eye-opening. And that, again, another reason of putting together these investment policy statements, or IPSs that people call them, too, and understanding, okay, I may have one or two goals going on at the same time. I have a retirement goal. I have a buy a cottage or a retirement place goal. We're going on a vacation, and understanding there's many goals going on. But often, actually more than often, I see clients coming with one particular investment. Everything is to the wall, and everything that is reactionary to the environment of the market, and they don't realize how exposed they are by not seeing different strategies and also going through a proper risk assessment through what their timelines are and the horizon that they see themselves at. So again, constantly chasing a number is not a smart way to look at it, but also being able to protect yourself against the ups and downs in the market and allow yourself to feel stress-free and at ease when you sleep at night, and that you're reaching your goals over time based on a strategy that may not be as aggressive as social media wants you to have it, or your next door neighbor who is promising certain returns on an investment. So again, it's been a pleasure hearing like yourself, the mission and the things that we've talked about through TVH Financial, and not just chasing a number of a particular thing, but really the clients walking away with us really feeling at ease that there is a more well-rounded strategy put in place for them. So again, I just wanted to mention that for Denis as he approaches our clients, and we have these great conversations, that we're truly really helping people achieve their goals. So
now, Denis, Ryan and I keep saying we still haven't found on Amazon a crystal ball that could kind of predict the future. So I'm sure, I get asked the question all the time. Ryan does as well. I'm sure you, as an independent portfolio manager, get asked the question, what do you think is going to happen in the next 6 months to a year? We're not going to ask you that question, but maybe you can provide some insights in terms of what the current market conditions are like at this stage of the game, and maybe kind of compare it to what we've gone through over the last 12 to 18 months, both in the bond and equity markets.
Yeah, it's and it changes on a regular basis. So I'll give you what today's view is. Last year was basically all about interest rate increases and reacting. On the side of that, you had that special segment about the Magnificent Seven. They will move no matter what the market conditions are, because it's more of like a theme of our artificial intelligence for the most part. Tesla was there again for a combination of things. This year, it was all supposed to be about rate cuts. Well, some of the numbers coming out are either showing, well, maybe inflation is a little higher than we wanted still. We're not going to cut in March, we're going to cut in June. Well, the GDP is a little strong now. So again, well, maybe September for the US. So this year, I think a lot of people thought with the rate cuts that the bond market would perform well. Obviously, it does not perform when interest rates are increasing, so everybody was prepared for at least, no matter what else happened, the bond market would do well. Well, with this constant moving of when we're going to get our first rate cuts, so far this year, the bond market's negative, which is not what people were expecting. Not big numbers, 1 or 2%. We're not talking big numbers, but that's not what we were expecting. So now we're looking at potential rate cuts June in Canada, although the guy from Scotia thinks September, and the U.S. has a much stronger growth outlook. So they may be looking at September. But as the market reacts, you'll see that. You also see what's going on in Europe. They're in the same very similar position on rate cuts, and they're also in this position on growth. We've seen some negative numbers out of Germany. They're not doing that well. For those who've been around a long time, this is not something that Germany's used to. They usually have growth. So we're going to keep an eye on that. In the middle, that last year's theme on the Magnificent Seven is not here this year, except for 3 companies. So you actually have 3 of those Magnificent Seven companies negative: Apple, Alphabet or Google, and Tesla, which is getting hit a little harder than most. NVIDIA and Meta are on fire, especially NVIDIA, and Amazon is doing well at the same time. But it really, if you're looking at the S&P 500, it really hides those numbers because they're because of the strength in these companies. So not all companies are doing well. You're looking at corporate earnings. Whoever thought we'd be talking about corporate earnings? That is starting to become a little more in play. You're seeing some heavy hits if they're missing the target, and their target's not necessarily better than the last period. It's just what analysts are expecting. You've seen that in the banks. Most of the Canadian banks beat it. BMO did not. So you're seeing some adjustments. The financial services is not what it used to be in the Canadian market. They do have big exposures now to the U.S. and outside the U.S. as well. So it's one of those things that holding a bank is not going to make you a ton of money like it used to. You still have the high dividend yields. That's one thing. But the growth, I remember when I was at a bank firm that the dividend fund was always the best. You get the dividend and you get the growth because banks were growing, doubling in stock price. Well, you don't see that so much anymore. So, you got 2 or 3 banks negative so far this year. The overall on the financial services is a slight uptick. So now we're going to be, until we see greater clarity on interest rates, and to make sure no inflation suddenly pops up, we're probably going to have that steady as she goes and the ups and downs, but you're not going to see much else. There may be, of course, individual companies acting differently based on their own outlook and earnings, but for the overall market, including the bond market, until we see more clarity on when those rate cuts are going to come, and otherwise it's going to be looking at earnings, and the market's not going to move anticipating lower interest rates and then moving as a whole. So
the one thing that I guess we can say too, Denis, is financial markets have been very challenging, very volatile over the last few years. Very much a roller coaster ride, starting off with the COVID year, for example. And I know with being an independent portfolio manager with Raintree Wealth Management and also TVH Wealth now, Raintree Wealth Management has its own level of communication where if there are things that are happening out in the market space, they do send out videos as needed. Some of them there's commentary as well that comes out on, I believe, a quarterly basis.
Totally. Yeah.
Now, maybe this is an unfair question to ask you right now because we haven't really talked about it. But have you thought about what other things you might do through TVH Wealth to help clients kind of navigate through some of these challenges, both good and bad? One of the things that Ryan and I really pride ourselves in is educating our clients. I think that's really, really important. We are the professionals in the field, but we also want people to fully understand the recommendations, why we're making them, the decisions that we make. So have you thought about what you're going to do to help help our clients and your clients navigate through some of these challenges?
Yeah, on the market itself, and as I'm part of the investment committee, we have about 5 people on it now, and we discuss the portfolios on a regular basis, whether we're making big changes or we're not. We just made some changes. We're adding a couple new managers, so these are big changes. We're revamping the portfolio. We're attracting. Before, when we were smaller, too small. Managers did not want to get involved. Where you're going to give us a small allocation, we want bigger bucks. Well, now we're getting a little bigger, and we're attracting managers, and they know we're growing. So what I do in those discussions, and what I do is I put together right now an email. I think we're going to probably want to formalize that a little more, and let them know the changes we're making and why. A little more layman's terms, but telling them exactly, because when you're on the advising side before, you usually need permission before you make a trade. This is discretionary portfolio management. But I said, no, I don't need your permission. You signed off the IMA and everything else. But I will tell you when we're making trades, who, why, if we hired somebody new, a little information on them, and how the portfolio is doing. We don't hide performance. We have a good start to the year. Last year we were sort of in the middle. This year we're starting off well, but it's just a matter of explaining. If you don't, this is similar to when we speak to portfolio managers who we allocate some funds to. If the performance is good, we want to know why. If it's bad, we want to know why. And if they can't explain either one of those sides, then okay, yellow flag. Especially when they're underperforming. So explanations and constant communication with clients is the way to go. And that's what makes them happy. Some will read it. Not everybody will read the commentary, but they're receiving it. They sort of look at it. Okay. They're telling us exactly what they're doing, which is a bonus. I need to know a little more information. And then there may be an outlook I add to that as well. On expectations, the committee's expectations as well, obviously. And clients seem to be happy. Some of them will read every word of it, and then on a review meeting they'll say something about it. So it's a big bonus. The one thing you don't want this to be a black box where nobody knows what you're doing, especially when you're getting into alternative managers. They want to know a little more about it. I have explained, even on reviews, a little more detail for those that are interested on what's going on. And, the selection we made, is it panning out? Yes, it's panning out. Or no, well, yes, but, they haven't been there long enough to make any call on them. So, yeah, it's keeping informed of exactly what we're doing. And if they want further conversation, I usually open myself up. Yeah, we could have another conversation. Especially if they get concerned and I get concerned. Are they in the right risk profile? Most of my clients do not really get concerned. Some of them follow it closer than others, of course. But most of my clients do not really get concerned, and they see what's happening and they're happy.
And there's another way they can also stay informed with you is they can like and subscribe to our Money Mindset Mastery YouTube channel, and they can subscribe to the podcast as well, which is available on all iPad or podcast platforms. Because so far, and Ryan, I'm sure you would agree, Denis, you're doing pretty good. With this being your very first podcast, so I'd think that I'd love to invite you back, and if there are some big changes that are either happening in the market space or even to the portfolios, for us to even just get together and record something quickly that we can send out would be very important, very beneficial. I'll just warn you, because Ryan might ask you to do some kind of TikTok dance, in the announcement. That's not my thing, so I'll leave that up to you.
No dancing.
My son's been teaching me some new moves, so I got a few extra moves down my sleeve. So yeah.
So Denis, what are some of the future goals and aspirations for TVH Wealth? And again, that's hard to say because TVH Wealth is like a newborn baby right now. But what are your hopes and dreams with TVH Wealth moving forward?
Well, to start, you want to get the word out. You want to attract new clients, clients that would fit into our philosophy. That's one of the first targets we want to do. And at the same time, keep current clients happy. So it's a combination of you. You want to keep the current clients happy. If they're happy, they may refer you to somebody. And as well as attract new clients. I think what we're doing on the portfolio management side is we're seeing a lot of positive things, adding a couple new managers. I'm not going to say it yet because they're not in the portfolio yet. But we're adding a couple of new managers. There's some of the names some people may recognize. Not big allocations, but some good exposure. You want some exposure. And I think, moving forward with the changes at Raintree, changes at TVH Wealth, I think it's going to be a positive for clients.
Yeah, no, I agree. And I know there's some initiatives you can't really talk about, but I guess all we can say is there are changes that are upcoming that are very positive, that are great. And again, another reason why we also agreed to form this referral arrangement, because I'm looking at what's coming down the pipeline, and there's some really exciting things that are happening. Potentially some technology changes as well. So I think that'd be great. In terms of the service offering, so yes, we do have the portfolios that you'll be managing. I guess what we can share with clients is that if they do have a stock portfolio, is there an opportunity, if they don't want to necessarily trade anymore, but they just want to hold those assets, would they be able to have you take over those assets or the stock portfolio, and then eventually, look at investing it into your own portfolios? Is that a possibility?
Yeah, we can't transfer any stock portfolio in kind. For some reasons, a lot of times, whether there's a big capital gain on it or they have an emotional attachment to it. Now, we try not to have emotional attachments, but some people, they worked there for years. They hold their company stock. They don't want to sell it all yet. And yeah, we could. Now, I will not give recommendations on whether they should buy more, sell more, or sell. I will leave that up to them. Because I really try to only recommend on our own portfolio. So yes, we could transfer in kind, discuss a potential plan for it to come into the portfolios. In some cases, I've had a couple clients still hold on. It's been over a year, but they're there. We're not charging a fee on them. I don't know if that'll change, but at this point, that's out of my control. But there's no fees on it, so we can transfer it in. But there will be discussions for compliance reasons. I will have to talk. Are you still comfortable holding it? Put some notes down. But yeah, we were doing it with a few clients already. And
what about mutual funds? Is that an option
as well?
Mutual
funds the same. Okay. I brought funds over from my previous employer. Okay. Some accounts I had inherited, and they had DSC, and they didn't want to sell them, obviously. For a good reason until it was over. So yeah, we held on. There's still a couple people that hold a few of their mutual funds. One's a gold bug. He didn't want to sell his gold fund. I said, okay, we'll leave it in there. But yeah, we do bring it on as long as it's a known name, not something that's not traded on FundServe. Yeah, we could hold the mutual funds easier than stocks. But again, from a compliance point of view, because that would not be part of an IPS holding side stuff. So for compliance purposes, I do have, put notes and discuss it with the client at least once a year to make sure they're still comfortable with it. The reason for them holding it is still valid to them, not me. And so then decisions are made.
Yeah, so the benefit, I guess, what I'll point out is if you do have a stock portfolio, specifically non-registered, but even registered, but on the non-registered side, they may not want to necessarily sell the security because, again, it could trigger a significant capital gain. But by you holding it, and having access to it. So by transferring it in kind, you could potentially systematically over a period of time redeem some of those funds, so you can manage that tax bill over time. So that would be the one benefit.
Yeah.
On the RSP side, again, if they're holding a stock portfolio, it could be that they might have a couple of securities that are performing reasonably well, and it just doesn't make sense to cash them out to roll them over into another RSP portfolio. So you might want to hold until it makes sense to liquidate that asset. And on the mutual fund side, for people who don't know what a DSC is, that's a deferred sales charge. So what happens is with some mutual funds, they're structured in such a way that if you redeem them before the 7-year cycle, then there is a penalty. So what Denis would potentially do, and correct me if I'm wrong, Denis, is a lot of those mutual funds would allow you to, for example, transfer out 10% free without penalty. So you could potentially, as you're managing the mutual fund, look at what the 10% is, and every year transfer the 10% until that DSC schedule gets to zero, and then the balance of the portfolio you can move out of that mutual fund into your own portfolio. Would that be correct?
Yeah. It's I've done it for a couple. I've called the company and to make sure that we don't get a charge. Some of them, when you're transferring a fair amount, it could be a good $10,000-$15,000 fee. So you do not want that charge. I never sold DSC myself, but I inherited some clients that had been sold DSC. So I was always keeping an eye on it and made the phone calls before anything was touched, and then confirm with the client after, are you good? Because in some cases, they didn't want to hold it. They just didn't want to be charged. So, right. Yeah. So it's a matter of communication with the client, communication with the company to make sure that everything's fine for the sale to happen. And then once we get the okay, it's done, and we put it into the portfolios.
Okay. I've been talking to quite a few clients more recently, hearing a lot about them, the old school, holding money in the mattresses. So maybe that's our next business idea. TVH mattresses, specially sold. You insert your money into the mattress and it gets documented. But do you have any suggestions of things for people that are holding a lot of cash, particularly in the mattresses?
Yeah, last year was a year, obviously, where the cash ETFs were putting out a reasonable yield. So it was over 5%. And I told my clients, and you'd be surprised, a lot of them had 10, 20, 30,000 in the bank doing, not much.
Yeah.
So I put that out to all my clients. It's now down to about 4.5 after fee. So I said, if you're holding any cash, I would like a higher return, because most of the people at the banks were not getting much. They're lucky if they were getting 1%. Right now they're getting over 4% after fees. So I said, this could be, we made it part of the full portfolio. And I said, don't look, you have your portfolio there of, sort of that moderate investing. You can hold within it also some cash as well, and make it a full portfolio. Because as you mentioned before, assets somewhere else, this would be one of those assets. And a lot of clients, I said, you don't have to sell it. If it's going to be used, because the one thing, what is the use for this money? Vacation maybe in a year, or buy a car in a year. Well, you don't really want to be invested in the market, given the volatility and what's going on, for something that's short term. So let's keep it in cash. That's a goal. That part of your portfolio is a goal for spending, and the rest, and you're getting more than your 0.5 at the bank, and the rest would be your retirement savings, or whatever the other part of the portfolio is for. And it could be just one full portfolio. And that's what I did with clients, especially clients that had TFSA room and had that 20 grand in the bank. Let's just put in a TFSA. You won't get charged on the interest. Keep it for your car, your trip. And we don't have to push it into the investments, short-term money. Again, part of the IPS, and looking, what's the time horizon? What's the goal for this portion of the funds? So you can have a portfolio where a portion of it is for different goals, and it will be invested differently.
Thank you. Now, gentlemen, we are literally approaching the 1 hour mark. So this is, this has been great. I mean, we could probably keep going, but maybe we'll have to record another episode and continue on with Denis. Ryan, did you want to kind of help us wind down this episode?
Well, yeah. I guess any final thoughts, Denis, for yourself? How people can improve their day to day and make sure that they know how to finally reach out to you.
So the reach out, I don't know if I could leave my email address or something.
Yeah, so you share your email address. There is a website as well, so you can share the website. I'm not sure. Have you remembered your phone number, your office line? Because it's fairly new.
Oh, no, I haven't used that one yet.
Oh, no, you have an office line. If you do have an office line, you go ahead with the other information, and I'll try to pull up your office information, office phone numbers.
So the email is just Denis at tvhwealth.ca. Denis is Denis, one N. Dennis with one N, I guess. At tvhwealth.ca. For any questions, basically, I've taken a lot of questions from clients, prospects, and everything else. It doesn't take me too long to answer, so you will get an answer. And any questions, and then if the services of Jim and Ryan are needed as well, we'll bring them into the loop. But if you want to talk about the portfolios, just let me know.
And you're doing a portfolio comparisons also, because I know some clients are asking, well, can I bring my statement and do a comparison of how I've currently performed versus maybe perhaps something you're offering?
Yeah, we can do some comparisons. The one thing I would want to, when somebody brings me a new portfolio, the one thing we got to make sure that portfolio was set up for them. So we go through some of the questions. We want to make sure it's the right portfolio. If it's an aggressive one and they're conservative, then there's no need for portfolio comparisons because it's just the wrong type of investments. Otherwise, we can do a comparison. We discuss it. We discuss what they're looking for. We know there's protections on downside, risk protection a little more on our portfolio. So we will go through both of them. And if they're showing me a portfolio, I'm going to ask, what don't you like about it as well? Because otherwise they wouldn't be showing it to me for the most part if they're very happy and with their portfolio. So it's a combination of things. We can do the comparison. If they're comparing just returns, that's an easy comparison. If they're comparing structure, that's a different comparison.
Yeah.
So we could go through the full analysis on this one on anybody who's interested in doing that.
Yep.
Denis, for your information and for those who want to call you, they can reach you on your office line at 647-795-7912. Again, that's 647-795-7912. So you officially do have an office line where they can reach you at.
Everybody else still has my cell, so they're going to get that number soon as well.
Yeah, and again, so tvhwealth.ca is the website where they can find you there. They can also reach out to Ryan or I. They can look for us at tvhfinancial.ca, tvhgroup.ca, or they can call our line at 647-727-4668. Anything else to add, Ryan?
Money mindset mastery. Share. If you learned something you took away, please share it with the people that really need to learn more about what's going on within their own financial situation and even the situation that's going on in the world today. So, yeah,
sure. Denis, how do you feel after your first, we're concluding your first podcast ever? How are you feeling?
Feeling good. Sort of glad it's over, and I'm not sure I want to look at myself and watch this again. But my clients I may send my clients the link.
Yeah, I think they'll appreciate that. I think it was great. I really enjoyed it. I can't speak for Ryan, but I see the big smile on his face, so I think he enjoyed it as well. And we're looking forward to hopefully recording more episodes in the future with you too. So I'd like to thank everyone for watching and for listening. And as Ryan said, just, subscribe and look for us on the Money Mindset Mastery podcast. And until next time, we shall see you soon. Take care.
Why is it me? Why am I a guy? I still